Hey everyone, in this video we're going to talk about how to make money from upcoming stock splits. We've seen both Apple and Tesla announce stock splits and then realize tremendous growth in their share price after announcing the stock split. Apple up over 25% and Tesla around 45%. Because both Apple and Tesla have seen their share price go up substantially after announcing a stock split, it seems incredibly likely that we're going to see other companies announce stock splits in the future. In today's video, we're going to talk about the top 10 companies that I think can have a stock split within the next 12 months, and we're going to talk about the potential for short-term profits for each of these top 10 companies. And stick around to the end of the video. I'm going to share with you how I will approach investing in each of these companies to generate substantial profits in a short period of time just from the stock split alone. If you like stocks, investing, and personal finance, hit the subscribe button and the notification bell, and you'll get alerted whenever I put out a new video. I have a couple videos a week on these topics. All right, before we get into the top 10, I want to share with you a couple of the honorable mentions that didn't make it into the top 10 list, but I think still have a decent chance of having a stock split in the next 12 months. So here you can see on the screen the honorable mentions that didn't make it to the top 10 list are Facebook, Microsoft, Zoom, Home Depot, Costco, and Wayfair. All right, let's get to the top 10 list. I've scored each of the top 10 based on the likelihood that they're going to have a split within the next 12 months and also the short-term profit potential from that split. The likelihood rating is based on the price of the stock, prior split history, potential benefits to the company for splitting the stock, and then also my own judgment. And the profit potential rating is based on the strength of the brand, the trading volume, and also whether or not the stock is in the top 100 most popular stocks on Robinhood. I think that also is a big factor in the ability to generate hype and buzz around a stock split here. I've also included my own personal judgment when developing these ratings. For each of the top 10, I've also captured the date of the next earnings announcement. This is important because this date is a likely date where we can see a stock split. All right, coming in at number 10 is Adobe, ticker symbol ADBE. The price is $515 a share right now, and they've had 5 prior splits in the past. The last split that they had was a 2-for-1 split back in 2005. I've rated Adobe a 4 in terms of likelihood to have a split within the next 12 months, and also a 5 in terms of that short-term profit potential if they do in fact have a split. The date to keep an eye out here for Adobe is September 15th, when they next announce their earnings. All right, on to number 9, Autozone, ticker symbol AZO. They're priced at $1,190 per share, and they've had 2 prior stock splits in the past, with the last being a 2-for-1 split back in 1994. I've given Autozone a likelihood rating of a 6 and a profit potential rating of a 4. The next date that you want to keep an eye on for Autozone that has a potential for a stock split is September 22nd when they have their next earnings call. Number 8 on the list is Alibaba. They're priced at $290 a share. It's the lowest priced stock on the top 10 list. They IPO'd back in 2014 and haven't had a stock split since. I've given Alibaba a likelihood rating of a 4 and a profit potential rating of a 6. And for Alibaba, you'll want to keep your eye out for October 30th. That's their next earnings call. Again, this might be a date where they can announce a stock split. Number 7 is Mastercard. They're priced at $365 a share right now. And their last split was in 2014 when they did a 10-for-1 split. Mastercard earned themselves a likelihood rating of a 5 and a profit potential rating of a 7. You'll want to keep your eye out for October 27th for this one. Number 6 is Nvidia, priced at $525 a share. They've had 4 prior splits. The last was back in 2007 when they did a 3-for-2 split. Nvidia, their likelihood rating is a 5 and profit potential rating of a 7. November 12th is when their next earnings call is, and this is the date that you want to look out for a potential stock split. Number 5 is Chipotle. Chipotle is priced at $1,300 a share, and they haven't had a stock split in their past. They IPO'd at $22 a share back in 2006, so that's some pretty massive growth since their IPO. Chipotle's likelihood rating is a 7 and profit potential rating of a 6. And you'll want to look out for October 20th here for Chipotle. Number 4 is Shopify. Shopify is priced at $1,040 a share, and they haven't had a stock split in their history. They IPO'd back in 2015 for $17 a share. So this is another one similar to Chipotle, where we haven't seen a stock split, and they've experienced massive growth since their IPO. Shopify has a likelihood rating of a 6 and profit potential rating of an 8. The date that you want to keep an eye on here for Shopify is October 27th. And number 3 is Google. Google's a big one here. They are priced at $16.40 a share. They've only had one stock split back in 2014. And this one's kind of funny. They used the year that they were founded and integrated that into how they split the stock. So they were founded in 1998. And what they did was they did a 1,998 to 1,000 stock split. So for every 1,000 shares that you have of Google, you would receive an additional 998 shares. Or every 1 share you had, you would receive an additional 0.998 shares. And it's just pretty neat that they integrated their founding date into the stock split. So if they do have a stock split, we may see some funny ratios here out of Google. And for Google, the likelihood rating that I've given it is a 7 and profit potential rating an 8. You'll want to keep your eye out for October 26th for this one. All right, number 2 on the list is Netflix. They're priced at $525 a share, and their last stock split was in 2015 when they did a 7-for-1 split. At that time, they were priced over $600 a share, so we're getting close to a similar price for Netflix as to when they had their last stock split. Okay, for Netflix here, I've given them a likelihood rating of a 7 and a profit potential rating of a 9. I think that if Netflix does in fact do a stock split, there'll be a ton of buzz, there will be a lot of talk about it, and that's what I think will generate the short-term profit potential here. All right, number 1 on the list, Amazon. I'm sure you could have guessed it. They're priced at $3,400 a share, and they've had 3 stock splits in their past. The last split that they had was back in 1999, when they actually had 2 splits that year. They had a 2-for-1 and a 3-for-1 split in 1999. And a lot of people really think that Amazon's going to have a stock split in the near future. One of the reasons is if they want to be in the Dow Jones Industrial Average, their price needs to come down substantially in order to be added to that index. And because of this, and the fact that they're such a high price stock right now, I've given them a likelihood rating of an 8 and a profit potential rating of a 10. I think that if Amazon does have a stock split, we might see similar hype to what we saw for Apple or for Tesla. Amazon announces their earnings on October 29th. So if they're going to have a stock split within the next few months, that's the date to look out for. Okay, before we go into my approach for investing and making money out of these stock splits, let me know in the comments, are there any companies that you expected to see in the top 10 that weren't there? Do you agree with the top 10? Let me know. All right, here's my approach to investing in these stocks to capitalize on a potential stock split. All right, and this is my approach here. Before you enter any trades or buy any stocks, you should do your own research and make sure that you feel really confident in the approach that you're taking. So my plan is that I'm going to take a small position and buy a small number of shares of each of the top 5 companies on my list here in advance of their next earnings. And if any of these companies announce a stock split, I'm going to buy more shares immediately. And when I say immediately, I'm going to be looking to buy shares either in the aftermarket, pre-market, or once the stock market opens after the split has been announced. And I'm expecting to see a really substantial increase in the price of the stock. If we don't see that on the first day, I will exit the trade, I will sell my stock and be done with it. And if we do see that really substantial price increase, what I'll look to do is sell small portions of my position over the next couple of weeks leading into the stock split. So I'll look to go into the day that the stock actually splits with about 20 to 30% of my original position and just selling over the course of the few weeks leading up to it. And at any time after the first day, if the stock price goes below the price that I bought it for, I'll be looking to get out of the trade. This is really a trade where we're trying to capitalize on hype and buzz, not the value of the company. So for this one, my approach is if the stock price goes below the price that I bought it for after the first day, I'm out. This is the exact approach that I took with both Apple and Tesla when they announced their stock splits. I bought on day one, immediately on the market open for both of them, and then sold a portion of the position over the course of the next couple weeks. I sold most of my Tesla position at $16.50 and $2,000 a share, so I left a lot of money on the table because the stock reached around $2,300 before the split. But it's a good way to lock in profits on this type of trade. And for Apple, I sold most of my position at around $450, $460 per share. I left a lot of money on the table because it went over $500 per share, but I locked in around 10% profit within a few weeks. All right, if you like the video, if you like the investment strategy, hit the like button, hit subscribe for more of these, and check out the next video. See you in the next one.